You managed the K-Web, saw its biggest inflows of the year last week, over $600 million. Big run-up since DeepSeek, K-Web up over 15% since then. But I do want to ask you, besides DeepSeek, has something else dramatically changed when we're looking at Chinese equities, specifically Chinese tech?
Yeah, definitely. Good morning, Frank. And yeah, we definitely do. I mean, since last January, when the Chinese equity markets bottomed, K-Web is up over 45%. So yes, we've had a recent run, but if you step back, big picture, K-Web has been in an uptrend. It feels like 2 steps forwards, 2 steps back, but in reality, it's been 2 steps forward, 1 back since January. And that's why technical analysts are so bullish. Also, we're seeing very strong corporate buybacks from the companies themselves. These are tech entrepreneurs. We're seeing many sell-side analysts upgrading the space. They're not upgrading China. They're upgrading China internet because of the fundamentals are improving in the space. And we think there's a lot more coming on the horizon in terms of policy toward the domestic consumption story in China. When I was just in China recently, real estate was the topic du jour. And there really is the belief that there's more policy support coming. Because it is a real crisis. They have to do more, which is why they're going to do a trade deal with President Trump, in our belief. And we do think a re-rating in the space is taking place. All
right, so Brennan's saying re-rating, whole new thing going on. Lenny, I'm going to come over to you. You're saying it's just more of the same old when it comes to China. I want to ask, when you say it's the same old kind of stuff, I'm looking at your notes right now, are we saying it's the same concerns about the consumer, the same concerns about the property sector, the same concerns about state involvement in companies? What's the same old same?
It's the same. I mean, if you go back to March 2023, Alibaba announced a major restructure, right? So the stock, jumped, 10 points. And again, we're in 2025, we have the same type of historic announcement, major investment into AI. Again, the stock up 10 points. But however, the fundamentals are not there yet. There's too many major if in the current marketplace today, and again, based on our notes, it's the same issue, the same policies, the same subsidies that's going to keep the market afloat. But however, going forward, we want to see the market operate independently of subsidies from the government and promotional, discounts from the corporate side.
Okay. Lenny, let me push back a bit, though. You're saying it's the same old same when it comes to the situation, but I'm looking at your outlook when it comes for the Hang Seng Index. You see it moving 9% higher this year. I mean, isn't that a pretty good outcome when you're investing in equities, period? I mean, whether it's in China or here in the U.S.?
Yes, it is a good outcome. Overall, the Hang Seng Index is still at a multi-year, bearish. It's still below its 2017 high. And it's much below its mid-2018 high. So, we don't see the Hang Seng. We see a percentage increase based on what's been happening for the past 2 weeks with AI and DeepSeek achievement. That should, in our opinion, provide some support for the Hang Seng Index toward the end of the year. Okay. But however, I think the market overall, it has been overly too aggressive on the potential, increase in the Hang Seng Index going forward.
All right, so Brennan, coming back to you again, you say it's different in China, but you're also saying things are different here in the U.S. You believe that President Trump's going to handle relations with China very differently than the Biden administration did. But pretty much from the offset, the president's been very vocal about China and also talked about tariffs. What's the big change that you're seeing in the Trump administration that's going to be possibly a tailwind for these Chinese equities, specifically for tech?
Yeah, I mean, certainly from the previous administration, there was no effort to do a deal. There was no effort to communicate with China. There was an explicit effort to hobble and cripple the Chinese economy, particularly Chinese technology. Donald Trump is a business person. He knows President Xi well, and China is not in a position to not accept a deal. And U.S. corn and soybean futures since the inauguration have been rallying, and we do believe that President Xi and President Trump have a relationship. They did a deal in the past. President Trump had said that he would go to China in his first 100 days. Just yesterday, he mentioned on Air Force One that he's willing to go back, and we do believe that President Xi sending the vice president of China to President Trump's inauguration was probably laying the groundwork for a China trip, and certainly Elon Musk. You mentioned, Frank, Tim Cook speaking to President Trump. These are all business people that Donald Trump respects, and they have a very strong vested interest in U.S.-China relations.
All right, Brennan, one thing, I admit that the commodity price you're talking about, the upside moves on corn and soybeans, but that could potentially be a lot of that front-loading ahead of potential tariffs. But I want to go back to the relationship between the president and China. You're saying that you think that he's going to have a friendlier outlook, if you will. But just to be clear, when DeepSeek occurred, he called it a wake-up call, and he actually asked for U.S. companies to step up to maintain dominance. So while you're saying the Biden administration wanted to hobble China, it's not as if the president wants to see China, a rising China, I should say. It's not, that doesn't seem to be the thing. What's the specific thing that you think is going to change under the Trump administration? Is it less export controls? I mean, what's the thing that's going to be the big tailwind in your mind?
Yeah, I think an element of doing a trade deal with China is the ability of Chinese companies to build factories here in the United States. Something the CATL, the big Chinese EV maker, their CEO publicly stated in December that he offered to build a factory here in the United States, and the U.S. government said no. And I think President Trump, a part of the reshoring, the bringing back manufacturing, Chinese companies can play a part in that. And I do think, President Trump, as we're seeing with Ukraine and Russia, he has an ability to negotiate in a very unorthodox manner. And I think he can do the same with China. And I think there's a lot of people who potentially viewed what DeepSeek did, which I think really does expose, this very crowded trade in this one specific area in U.S. equities globally. Okay. I think it is a global overweight. So I think, yeah, buying a little smidge, a little touch of cheap China tech, taking some profits from U.S. tech makes sense, in my opinion.
Okay, understood. Lenny, I'm going to give you the last word. We got to get going in a second. We mentioned you have a sell rating on JD.com and Alibaba. The Alibaba report, has that changed your view at all on Alibaba? Is there anything coming up that could potentially change your view on JD.com? Are there any catalysts that you think investors need to look out for?
I think the catalyst for us to look at is to see, how the Chinese consumers are reacting, to the market, and to see, if the economy has improved. I mean, we have approximately, 150 million, unemployed individuals in the marketplace right now, right? And with the introduction of DeepSeek and AI, and companies heavily invest in technology, that's going to reduce the workforce, right? So if that reduces the workforce, then that's going to actually hurt consumption. Then again, it's going to be the same thing as last year. The regulators, the government is going to increase, subsidies to keep consumption afloat. So we don't see that changing anytime soon.